Good afternoon and welcome. Happy Friday to everybody. This is the 6th of our monthly webinars, our You Talk series on important topics in commercial real estate. My name is Andrea Houston. I am a professor of finance in the Miami Herbert Business School and the academic director of our real estate. I'm very, very happy to have you here. And I don't want to take up too much time away from the panelists, but I do want to note that we have a new feature. If you look in the middle of the bottom of your screen, you'll see that we have closed captioning enabled on this webinar. And if you like it, you can just leave it there. Or if you don't like it, you can toggle a button and it will turn off, and that may make you more comfortable. We will start with our panel in a discussion of some questions that they have prepared. We also have questions that were submitted in advance by the audience. And as the webinar goes along, if you find that there are questions you would like them to address, please type those in the chat. And at the end of the webinar, we will turn to those questions. Without further ado, I would like to introduce our moderator, Dana Telsey, an extremely well-regarded analyst for retail companies and the head of Telsey and Associates. She will also introduce our panelists, although many of them will need no introduction. So Dana, please take it away.
Thank you. Thank you so much for Andrea and Chuck for having us here today. It's greatly appreciated. Hope everyone and their families are all safe and healthy. We're here today to talk about one of my favorite topics, that retail and retail real estate is not going away. With me today, I have a distinguished group of panelists, and each of them will introduce themselves. We have John Dolson on the retailer side, head of real estate for Nordstrom. We have Danny Finkel on the brokerage side at SMD at JLL Capital Markets. We have developers and owners, Jessica Goldman-Srebnick, the CEO of Goldman Properties and also founder of Goldman Global Arts. And we have Manuel Martin, the global head of retail real estate in Nuveen. So I'll leave it to all of them to each introduce themselves now, and then we're going to have a discussion before we go on to Q&A. John, would you like to kick it off?
Sure. Thank you for having me and look forward to the panel. As Dana said, I support the real estate function at Nordstrom. I've been here 20 years, and you know what that means is I cover anything real estate related. So from design to construction to site locations to facility. So looking forward to the questions. Thanks.
Thank you. Jessica?
My name is Jessica Goldman-Srebnick. I'm the CEO of a company, a family business that's a little over 50 years old, founded by my father, Tony Goldman. We are in the business of revitalizing neighborhoods. So Soho in the 1970s, Miami Beach in the 1980s, Center City, Philadelphia, Wall Street. We're in a beautiful neighborhood called Wynwood here in Miami. And we are owners and operators of all kinds of retail entities, whether it's boutique hotels, restaurants, art galleries, retail stores. I'm the curator of one of the largest outdoor street art museums in the world called the Wynwood Walls, and the mother of 3 sons. So that's me.
Thank you. Manuel?
Yeah, hello. Thanks for having me here, Andrea, and University of Miami. I've been doing retail probably the last 20 years. I started in Europe with Rodamco and then Unibio. And then I moved to Henderson Global Investors. We built a large platform in Europe. And I moved to the US 6 years ago. I've been managing our portfolio here and going through this transformation in the industry. And I'm looking forward to sharing with you the views and comparing points to across sides, both sides of the pond.
Thank you. And Danny?
Hi, and thank you guys for having me. I'm really excited to be part of this great group. So as said, I'm with JLL Capital Markets based in Miami. And here I co-run our Miami office with a couple of grads. And then I also co-run our US Retail Capital Markets platform. So have the pleasure of working with John from coast to coast on a number of different transactions, and as well as Manuel, and we'll share some thoughts on what we're seeing in the current retail capital markets landscape.
Thank you. Thank you so much, all of you, for being here today. Let's start a discussion. We all know that the pandemic was a catalyst that accelerated a lot of things that probably should have happened earlier, but it happened in a space of less than a year, whether it was weak chains going bankrupt, closing stores that weren't hitting profitability metrics or didn't look to show successive rates of increases, e-commerce penetration accelerating, but most of all, what the pandemic did is it accelerated innovation. Innovation in how consumers spend, what they're spending on, and how retailers are using data to inform. I've always believed that there are three elements that make brands, retailers, and retail real estate successful. It's about concept, being driven by innovation. It's about execution, which is driven by being seamless and having speed. And it's about management teams who are using data to inform their vision. So as we think about the go forward, what we learned from 2020, what we're applying in 2021 and beyond, what lessons have each of you learned for the near term and long term in driving your businesses? Jessica, would you like to start?
Sure. I think that, if I reflect back on 2020, I feel like I learned 10 years worth of lessons in 1 year. And I look at 2020 as a year of reflection. And obviously it was a year of challenge and a year of disruption and a year of sacrifice and, and pretty much everything, every, imaginable emotion you can have, you probably felt it in 2020. But I think what it also did was it was an opportunity to reset and rethink. And so now I look at 2021 as the year of the decision. And so the businesses that we're struggling to begin with likely will not succeed. I feel like there are enormous opportunities. There are enormous opportunities to kind of rethink what were your pain points in 2020? What were the things that weren't working well, and how can you readjust those? And so we've spent a lot of time thinking about that, and we have hundreds of tenants, all different kinds of tenants, retail, office. And so, how do you support those tenants, but also how do you survive as an organization? And there are a lot of difficult decisions that have to be made, over time. I think, for me, it was an enormous learning experience. It was an opportunity for me to get a whole lot of courage to make decisions that maybe I was on the fence about in the past. And I think that we're going to see a lot of innovation in product. I think product has to be, really unique and differentiated. I think that we use the word curation quite a lot in our business, not just in the art business, but in the real estate business, and how you curate neighborhoods, how you curate experiences. I think that's incredibly important. And obviously, being someone incredibly passionate about the arts, I'm the CEO of a company called Goldman Global Arts, and we infuse art into everything. So it is beyond the Wynwood walls. It is, how do you infuse art into real estate, into product? How do you make life more hopeful for people? How do you make it more interesting and more positive? And I think that we are all, obviously we could all write books on the things that we learned in 2020. And shame on us if we don't put those lessons to use in 2021 and really make life better for our employees, for our tenants, and for kind of the community at large.
John, Nordstrom also basically moved the ball forward too in 2020, looking at changes in the landscape and communicating with customers for 2021. What were the lessons that you learned for the near term and long term?
Well, you hit on this before, in that, some of the things that we did in 2020 were kind of in place going into the pandemic. What the pandemic did was accelerate their adoption. I think the lesson learned is the fact that we all know, which is retail is dynamic, and it's just that reminder of that fact. But really, kind of the big takeaways that I take away from it is, you gotta be flexible, and you can't be flexible if you haven't spent the time to create a lot of different options for the customers in advance of something happening. And that's what we were doing. So we were already rolling out the buy online, pick up in store, the curbside pick up and drop off. So in advance of this, we were starting to develop these processes, these technologies, so that when something unexpected happened, we were able to kind of really flex towards them. So, what the next dynamic event might be, who knows? But what you need to be doing in the here and now is coming up with options. And they're options because you never know what's going to stick with the customer. And you also don't want to force the customer into any one specific solution. Throw as many options out there and let the customer choose is another good thing to learn from 2020. And they will find what works best for them, which might be different amongst several different customers. So again, the optionality, the flexibility, and just the continual reminder that retailing is dynamic.
And then Manuel, where do you see the opportunity? What are you seeing out there in terms of the retailers and retail real estate, given your purview?
Yeah, I think I see the retail industry generally speaking as a fast moving. You know it well, Lana. It's never stopping. It's retailers reinventing and consumer changing. But probably this pandemic has accelerated trends radically, and I would define the new consumer as ultra convenience. People are demanding everything now and here with zero friction. At the same time, we have seen resilient formats over this crisis. We have seen home goods, we have seen grocery, generally speaking, necessity, big boxes. Before the pandemic, Danica told to the market before pandemic in power centers, but we have seen these assets performing really well. So many lessons for investors. I think the basis is playing a super important role for everybody. If you have all rents and all prices, it's very difficult to transform your asset. We have in the US around 100 assets, and the high basis ones are difficult to transform. However, there are very good opportunities in the market today because you have negative rental growth, and some special situations you can access really good stuff, and you can transform this stuff. So I think it's if you compare the returns to industrial or residential, probably there are 200 or 300 bps of spread in retail with very healthy credit tenants.
And then Danny, as you think about space and what you're seeing out there, what do you see as the opportunities? How is pricing changing? I think he's still on mute.
Sorry. You go back in the pandemic, and obviously there was a point in time where everybody was really concerned about retail, and there was a moment when everybody was sitting in their houses and wondering about retail. And John, the department stores were all closed and the malls were closed, and it came back to the reality. John said the word retail is dynamic, but at the end of the day, it's really about creating the experience. And it's a word that's overused for retail, but we're seeing this funny dynamic in South Florida right now in South Beach, where people are getting out and they're going to South Beach and they're going crazy. And there's this discussion of this revenge travel, and then, which will lead to this revenge shopping. And at the end of the day, retail is an experience. And while it's great to have things and convenient to have things shipped to your house, I think people are going to bypass shipping to the house for the opportunity to go out, be around other people, because I think we just had a great lesson, which was we don't want to sit in our houses all day and be cooped up. We want to go to the office. We want to go to these places. We want to see other people and experience different things. So from a capital market standpoint, the capital is moving to the simple retail, which is grocery anchored. And because that's sort of viewed as the safe haven for retail. But when you look at where are the opportunities are investing in the places that people want to go and spend their time and spend their money and be around other people and enjoy some sort of an experience. So whether that's a mall or it's in Wynwood or, you know, some of these other amazing projects, that's the, you know, when all said and done, I think that people are going to come to the realization that retail is just a critical part of their everyday life that's so important to what makes our lives so great and the different experiences that we all enjoy so much.
Well, Danny, you mentioned something very applicable for Jessica, urban retailing. In the context of demographic and lifestyle changes, Jessica, what are you seeing in terms of the long-term outlook for urban retailing, given the incorporation of art and different retail concepts? What do you see out there?
So I just want to go back for 1 second and hit on something that John said, because, you know, with retailers, I think this is an incredible opportunity to experiment, to try different things, to try new things, you know, and to Danny's point, you know, people are fatigued. They're tired of kind of their lack of connection, and they want experience. I think that we're going to see a lot of leisure travel happening. I think less business travel. I think that, you know, what we're seeing in South Florida is a huge increase in the food and beverage kind of market, where you have restaurateurs from around the country kind of pinpointing Miami as a place that they want to be and focus on. It's kind of bizarre, truthfully, and I'm sure Danny knows this. You know, it's almost like the gold rush here in South Florida, for a whole host of reasons. But, you know, again, back to the kind of the year of the decision, people are making big decisions. They're making decisions about where they want to live, about what they want to be, you know, what they want to be doing in their work life, how they want to be spending their personal time, and what they want to be spending it on. I think there's a real appreciation for what we have lacked over the last year, and I think that we're seeing a lot of new spending. I mean, we completely changed what we're doing at the Wynwood Walls, and, you know, and really focused on programming and experimental, you know, experiential types of opportunities. We're seeing big sales in our retail store, because we're doing different kinds of product that that collaborate with artists that are unique, that are one of a kind, that give you a sense of place. You know, so I think that we're seeing a lot of food and beverage. We're seeing a lot of movement in the office market. And I do think that, you know, it's a function of what's going to stick and what's not going to stick from this post-COVID world. I think that's something to really, really consider and really think about. And with remote working, what will stick? Do we all want to come back to the office? Will it be more of a hybrid approach? You know, anyway, I feel like I'm getting off track, but it is a function of what will stick and what won't stick. And I think brick and mortar is, you know, really has to think about how they will differentiate themselves in the market, with their product, with their technology. You know, someone mentioned, you know, do you want to get everything online? I love going to a store. I love feeling the fabrics. I love looking at something because it looks a whole lot different in a picture than it looks in person. So creating environment is going to be really critical, and how that includes art, how that includes music, how that includes the senses, how that includes service, how that includes technology. Those are going to be all very, very important components.
I agree. I love going to stores too. I grew up in Manhattan, and we had a bookstore on Madison Avenue. And my grandfather was cash register #1. My mom was #2, and I was #3. So I always believe in that touch point is important. And Nordstrom basically has the identity and the heritage of that. How are you reformulating that touch point in order to make that physical experience, John, as exciting and as essential for the customer in the future as compared to online, which you're also very strong in too?
Yeah, well, I mean, I kind of think of it, and Jessica hit on this a little bit of you know, the precious commodities time and how we're going to utilize our time. And, you know, it's certainly the case before the pandemic. I think it's been exacerbated by the pandemic in that we haven't been happy how we spent the last year. So it reinforces that time is precious. And so whether that means 9 to 5 in office, probably not going back to that because we don't think that's worthy of our time. That's why this hybrid idea is catching on. But it's also the time you spend in brick and mortar. And sometimes you want that deep in-person high touch experience at a shopping center where you can feel the goods, touch the goods, see a curated selection. For us, work with a salesperson who's really a subject matter expert in that. Enjoy the physical attributes of the shopping center or the urban location, go out to dinner. Sometimes you just got to return and you want to drive up to that curb and you want it as easy, seamless as possible. And so I think what we at Nordstrom need to do is, number one, is if somebody chooses to go into our store, and that's the key phrase, chooses, we need to make it compelling, impactful, and worthy of the time they're spending in our store. But we also don't want to force them to do them. We want them to engage with us however they want to engage with. And so this kind of comes back to the optionality. Create as many ways for a consumer to engage with Nordstrom as they can, and they will choose the way that fits for them on that day for that particular errand or experience. But again, it comes back to make it as easy as possible for them to buy online and ship to home, or buy online and ship to the store and pick it up at the curb. And that mobile experience of them calling, it's working with our landlords to make sure that we have that capability to let them pull up to our front door. If they want to come into our store, you just got to make it so compelling that it's really worth their time, and be respectful of that.
And one of the questions that we've been getting is off mall, on mall. What's your vision of the future of the mall and the future of outside the mall?
I spend less time thinking about mall versus non-mall. It's really what's a great retail experience, and even retail experience. What's a great experience for things that become more mixed use than not. Sometimes that's going to be an enclosed mall. I mean, think of North Park Center in Dallas. I mean, you can't get a better curated. It's hard to get a better curated selection of just in an enclosed mall experience with a wonderful common area, with art. So that mall's not going anywhere. And then there's great, Wynwood, to the point of this conversation, a great urban experience. So on mall, off mall, strip center versus shipping to your house. I mean, it's all about the curation. It's all about what that property's perspective is. And I mean, listen, we also do a huge business in Nordstrom Rack, and what works well for Nordstrom Rack is your classic power center, because that's a convenience retail experience where people drive right up, have an easy parking experience, and can leave fast. That's an off-mall experience, but that has just as much place as some of the malls, some of the lifestyle centers, some of the urban areas. So if it's a strong curated mix that has a compelling value proposition to the customer, whatever that value proposition is, it's going to be successful. If it's bland, if it's boring, if it's ubiquitous, then it doesn't matter what it is. It's not going to bring customers.
And then Danny, what are you seeing out there in regards to the economy, investment in retail real estate property and centers? What's happening and how do you see it changing? What should people be investing in?
Yeah, so interestingly, retail was clearly viewed as an out of favor asset class. And we saw lots of capital flows over the past year into industrial and multi-housing just from a safety standpoint. More recently, we've seen a couple of very interesting trends. One, we're seeing capital flow shifting into Southeast and the Southwest, where you're seeing great population growth and employment growth, corporate relocations, things along those lines, across all property types, but retail specifically. And then we're seeing a lot of 1031 capital moving into retail right now. And so it's sort of an interesting dynamic, but people who are selling their multi-housing or selling their industrial, who maybe weren't planning on selling, but the pricing became so compelling that they couldn't say no. And all of a sudden they're looking for places to put capital, reinvesting or competing to buy other industrial properties or multi-housing properties is really expensive. And so they look at retail and they said, well, you know, it's not a dead asset class. If we can buy high quality properties in good markets, growing markets, again, specifically when you look at where the high growth areas of the country are today, and you're seeing, as Manuel said, you're seeing returns that are 150 to sometimes 300 basis points wide of other asset classes, it's really compelling. So we've seen a meaningful pickup in activity for investors looking at retail in all property types, from assets that were once viewed as maybe a little distressed and maybe thinking of them as in a reimagined state down the road, to core grocery anchored, to the net lease across the space. So I think we were always believers in the future of retail, but I think we were very surprised, and we've been very surprised and very pleased, to be quite honest, with how quickly the capital markets and the investor mindset has shifted back to retail, and it's become a very compelling investment opportunity for a lot of people.
It's very encouraging to hear. What are you seeing in urban areas versus suburban areas? Is there a difference?
There is today, and I think the urban areas, when I think of urban areas, I'm thinking New York City, San Francisco, some of the bigger markets. I think there's still a little bit of a wait and see there, and I don't think anybody questions the recovery and people going back to those markets and people going back to work in New York City or anything along those lines. I think it's more a question of rents, and so I think in some of those markets, I think people are still going to take a little bit of a cautious approach, see where the rents settle in before they start making any large investments. Lincoln Road as an urban area, for example, where you have seen vacancy, you have seen rents soften quite a bit. We're fielding a call a day from capital sources who are saying, we want to buy Lincoln Road today. We think this is the time. The future is bright for South Florida, Miami specifically. And we want to go long on Lincoln Road and take a very aggressive approach with a forward-looking mindset on rents. That's not all markets. I think that markets, again, Miami in particular, South Florida in particular, is ahead of the curve in that regard. Obviously we were shut down less. The retailers here have performed better. Balance sheets feel a little better, but it'll cycle back. And I think the more people I speak to believe the summer will continue to be slow, but come Labor Day, post Labor Day, people are going to really get back to work in a lot of the major cities, and then we'll see how that comes together and how the rents start to recover in a number of those markets.
Manuel, what's your perspective being a significant owner?
Yeah, it's a complex one. Thanks for asking. It's we have malls in the US. And those are challenged because regardless of technology and pandemic, the supply here is 7 times if you compare to Europe. Okay? So 7 assets for the same number of people. And then the second part is the anchor themes, excluding Nordstrom. And I don't say this because John is here, but the all school department stores, I think, have a brilliant future, a bright future in the industry. And that's what's the American mall anchor with. So in Europe, in the country, you have Targets, you have these hypermarkets, and these are working fine as magnets for people. So this is a big problem we have. We have also a big chunk of urban assets in San Francisco, New York, Boston. Within these cities, as Danny pointed, are going to recover sooner or later. It's a question, as I said before, of the basis, the rental basis. So probably good opportunities to buy now in New York, in the big gateways, but you need to have some nerve, no, to do this. And we see this in Soho and in other areas, very compelling deals from the leasing perspective and from the investment perspective. And then power centers is also another part of our portfolio. And we are confident. We know we need to put out the asset management. We need to re-tenant, to reset rent sometimes, but it's a niche that's going to work going forward. And then finally, new themes. We are strong believers in mixed use. Louvain is organized in sectors, so we are very well equipped to underwrite and manage these assets. We have now a significant portfolio, 7 assets in the US. We have a large development in Edinburgh in the UK, another one in Charlotte, and we plan to continue deploying capital in the mixed use space. And finally, necessity. That's probably the other side of retail where we're going to put all the capital. That's going to be grocery. That's going to be essential community shopping, especially in the Southeast, as Danny was pointing out.
And then if you
Can I just make a, sorry,
Please.
can I just make a comment about just from the landlord perspective and values? I think that everyone has to rethink value. And so someone asked a question about, percentage rents. So yes, we are absolutely seeing businesses come to us and want to structure more on a percentage rent basis, more, as opposed to just a flat base rent. And I think that it's really important to think entrepreneurially and think long term. And so if you're going to look to squeeze your tenants for every single penny that you can, the potential of them surviving in this kind of environment is going to be very difficult. And I think that, again, yes, for sure, in every market, even though Miami is a very hot market at the moment, but really in every market, landlords are going to have to rethink kind of their rent structures. I think banks are going to have to also be sensitive to that and be helpful to that, because we're all in this together, right? We want to create thriving businesses, thriving opportunities. I think that it's really important to consider the pedestrian experience. Lincoln Road has a pedestrian experience. Green Street has a pedestrian experience. 13th Street in Philadelphia is a pedestrian experience. Same with Wynwood. And the malls, I think we don't have, I don't have experience other than being a customer, but from the landlord perspective, we don't have the experience in the malls. But I think malls are really going to have to rethink what that experience feels like. I mean, Bal Harbour is a beautiful experience of taking the community, like taking the environment of where you are and immersing it into the shopping experience. And, Matthew makes one of my friends here also put a question in here about, kind of shifts in leasing durations. Yes, I think they're shifting to more short term in some cases. And in other cases, people are trying to take advantage of a lower rent and trying to kind of, have very, very long-term leases. So it's there's a little bit of both. And, and the in-store experience versus the online experience, because that was another kind of question. I think the online experience can be very overwhelming. And I think, again, that's going to be very important to kind of curate the product. There is so much out there. And again, I think there's a function of being able to really do both really, really well. Nordstrom's kind of leads the charge in that always. But yeah, it's all about differentiation of product. That's how you are, in my opinion, that's how you get to the customer, and that's how you get the customer to you.
Yeah, those are great points. If I may, Dana, very quickly, I always, when we are looking at new acquisitions lately on non-necessity retailers, one part of the due diligence is what's the retailer doing the technological front? What's the digital investment? What's the website, the fulfillment, the logistics? That's super important because it's not just the performance and the EBITDA and other financial ratios. It's also the future of this retailer in the new world. And then Jessica, you're right. For the ones we have already, we cannot squeeze them. Whatever we're going to do with the properties, if it's going to be a long-term hold or a short-term sell, we need to make the most of the people we have already. It's always more expensive to replace than to work with the existing ones.
And Dana, I would just one comment to make that, and Jessica runs a very unique property type where it is highly curated. And so whether it's a percentage rent deal or it's a short-term lease or whatever she needs to do to bring in the right tenant mix to make her property special is what she's going to do. And so the economics of the deals, obviously she wants the best economics she can get, but she knows the economics are going to work out over time if she creates the right experience for the consumers and they keep coming back. And so that's one side of retail. Then there's the other side of retail, which is all about convenience. And so, you know, John talked about Nordstrom Rack, and it's got to be get in, get out. You're and not to totally commoditize what it is, but you're offering a commodity, and it's the speed and the efficiency and the convenience that you can offer that. So in those regards, the economics of the deals have to make sense a different way, and the lease terms are going to be structured a different way. And so things like percentage rent are the smallest of the considerations, because there's a whole long list of other lease clauses that are really problematic for landlords, co-tenancy and termination rights and everything that you know John spends you know, kind of twirling his mustache trying to figure out how he can complicate these things for all the other department stores and mall owners, but that are so important in the industry and such a big part of what makes retail great, but also makes it really complicated.
How about pandemic clauses?
I'm just teasing, John, by the way.
Those are fun.
Tell us your thoughts on those pandemic clauses, Jessica. We've heard all about them.
No, thanks. I'm going to hold my thoughts on those.
Got it.
There are some questions from people in the audience I thought would sort of fit in here, if you don't mind thinking about that. On the technology side, someone asked if you see the trend of e-commerce retailers moving into brick and mortar staying, or you think that that will reverse. And then also someone asked about any new groundbreaking technologies that you're seeing either from the brick and mortar side or from the e-commerce side. So I thought I'd have a bit about that.
If I may pick on the first one, Andrea, we are invested in a company called Fifth Wall. It's a venture capital company doing digital retailers. So they are putting money in this in the early days of these digital retailers and then selling them. And we did this investment in the fund to have access to these digitally native retailers. And I can tell you, after 2 years of experience, these people are going physical. There is a glass ceiling for the digital retailer. If they don't go physical, their marketing cost is exponential, and they're missing a lot. Actually, Inditex, that's the Zara owner, they're selling 30% more online when they open a store in any given zip code. So they have to go, but it's difficult. It takes time, and I think sometimes the digital retailers are a terrific tool to reposition assets, not massively, but with some key brands, which is gonna bring the perception of the asset modernized and in line with the new trends.
Oh, go on, Andrea.
I was gonna say, anything on new technologies, anything you're seeing people adopting?
If I may continue, technologies also we are having a lot of insights in new technologies with our Fifth Wall investment and other contacts we have in the industry. And listen, at the end of the day, I see technology from 2 different angles. Technology can be something you gotta get protected from. That's why necessity retail is doing fine. I mean, technology is very difficult to replace the grocery. I know the online grocery is growing, but if you compare to non-food or non-edible, is nothing. It's almost irrelevant, and it's only happening in the densely populated areas. So you can protect from technology, and the other way around is you can incorporate the technology into your assets, okay? I think the smart owners and the smart managers, that's what they are doing. And we are bringing technology, for example, on the way we manage our security, or parking, or traffic flow, credit card expenditure. We are tracking people with the telephones. So there is a huge world of technology out there, Andrea, to be exploited, and that's growing every quarter. You know.
I'll just
and Andrea, go ahead, Jessica.
No, I was just going to add, I think that technology gives retailers the ability to streamline. It gives you the ability to manage inventory better. It gives you the ability to communicate with your customer better. And I mean, you can do things. We just instituted this new technology called Art Cloud. We manage a gallery, and so it takes all of our inventory, puts it into I can have it on my phone. I can see what has sold, what the price points are, how big it, what the size it is. I can even do a virtual install if I'm with a friend and I show them a painting, and I can point it at their wall and show them what it will look like. So I think, it's pretty incredible. And I think there's a lot of things out there, but I think it really, for the most part, it gives, it's a way to be more organized, streamline, and really communicate and connect better with not just your customer, but also with your employee. And I think today, in working virtually for a lot of people, that is really, really critical in how we communicate with one another, and how we, how we manage projects, on a virtual, with technology. Like, all those things are going to be really important. Danny, were you going to say something?
Yeah, I was just going to, just quickly, the role of the landlord has changed dramatically, where not that long ago, a good landlord made sure the parking lots were swept, and they collected the rent, and they kind of did their billings properly. And landlords are now partners with the retailers in the shopping centers. And John will tell you, he's talking to his landlords daily about different things. And Manuel just said that, they're tracking cell phones at all their shopping centers. So if you go to any Nuveen shopping centers, Manuel's going to know. But but it's important. And then they take all that data, and they know, and they can share with their retailers how they market and who they need to market to, and where people are coming from, where people are not coming from. And so the landlord has to play a really, really active role in how in a partnership role with their retailers, and drive traffic to the property. That's the landlord's obligation to their tenants, which I think has changed. The tenants were responsible for doing their own marketing and creating their own business, and now the landlord is truly a partner in that. The good landlords are truly a partner in that, and the retailers recognize it, and it's a big differentiator. But it's by using technology and figuring out how to go about that in the most efficient way, and bring the right people to their centers.
Dana, I don't know if you've had other questions that you wanted to cover. I have a couple more, but I know you have planned some out as well.
Two things, and then let's go to yours, Andrea. Speaking about demographics, John, you know a lot about your customer. What's helping you in terms of planning store openings, merchandising, online assortment from the data you have about your customer?
Oh, fortunately for us as a retailer, we have a loyalty program. So, in general, people buy into that, not buy, but they support it. That helps you learn about your customer, and really what that helps you do. And Jessica hit on this about the physical experience of a store, which is being able to touch and feel the goods, know the size, the curation. While at the same time, when you try and do that online, if somebody types in, a black blouse, thousands of options come, and that's not a good experience. So it's, how do you take what you know about the customer, what your salesperson does, or what that customer who's been a loyal Nordstrom customer, how do you take that and kind of really curate it down to something that is meaningful for them? And then as they swipe, as they say yes or no, how do you learn from that? How does your, not to use a phrase that people are scared about, but how does that artificial intelligence kind of inform the next picture that you show them so that you're moving them in the right direction? You have things like that, then, based on what people buy, that helps your merchants decide what they're buying for the next season. So that helps. And then from the location strategy, we know where our customers are at. We know how they're interacting with us and shopping with us. So that informs both closures. Where do you not need those stores anymore? And, we did not reopen 16 of our full price Nordstrom stores after the COVID closure, because we determined that, we were probably had too much full price square footage, that it was better, especially in these multi-store markets, to really concentrate our efforts on having 1 or 2 great full price stores instead of 3 or 4. It helps informs, we have a few of these Nordstrom locals that we're experimenting with. It helps you realize maybe where there's a great concentration of Nordstrom customers who might want to engage with us more often from a physical standpoint, but don't want to go to the shopping center on a regular basis. So that helps you find where those might be. And certainly the same thing with the rack. It helps you rationalize your portfolio, both by adding more and by taking some away.
Great. Andrea?
We try to keep all of these things optimistic, but there are a couple questions that are completely optimistic here. One is whether or not mom and pop retailers are viable. And another one that is kind of related is one that's very, very popular with our students. And I can tell we have a lot of students on this call. And that has to do with adaptive reuse, especially with some of the mall space that is pretty obviously not coming back as a mall. And I'm just curious about whether any of y'all have the ability to point to an example of adaptive reuse that has worked out well, that we can learn things from for other projects. But then also first the mom and pop, because I know those are near and dear to
the mom and I was going to say, I'll kick off with the mom and pop as a big national retailer. Of course, they're going to survive. Retailers, big national, large retailers are constantly going under. Others are growing, but it's that mom and pop. It's that next generation of stores that are kind of coming in and growing, and people with great ideas, unique solutions, great curation. Mom and pop, new retailers are going to constantly be coming into the marketplace and evolving. And that's the exciting thing about retailing. Someone always has a great new idea. So that's fun.
But they need a chance, right? They need a chance. I totally agree that the mom and pop is, hopefully here to stay. They bring something really unique. They bring something unique to a neighborhood, which is a personality, something that's differentiated amongst, all the big box and big chains. And so I think that it's important to recognize the importance of those types of businesses and ways in which we can support those types of businesses as landlords, but also as customers. So that's the answer, at least my answer for the mom and pop. And as far as like adaptive reuse, I was trained I went to the Tony Goldman School of Business. I was the only student, but actually that's not true. He had many, many students. I was just a very lucky daughter. But so, he always looked at adaptive reuse as a really, really important tool in the toolbox. And how can you reuse something? How can you see the beauty and the value in something when others don't? That's what I've experienced literally my whole life and my whole professional career. And so there are, if you look at it like a Rubik's Cube, you just have to twist it and turn it and figure out new ways and creative ways of repurposing. Ocean Drive, which is going through its own kind of, its own, what's the word, evolution at the moment. When we first came to Miami in the 1980s, Ocean Drive was the largest concentration of Art Deco buildings, Art Deco architecture, and it was crack houses and old people. And so it was a function of, what do you do to change that perception? How do you repurpose those beautiful buildings? We had to repaint them. We had to give deals, really, really creative deals for really cheap to bring people into that community. So we gave, fashion businesses and modeling agencies deals they couldn't refuse. In Wynwood, we gave the Museum of Contemporary Art a 4-year deal for $1 a year. And it seeds the business, it seeds the community. And then when you start to see others in the community, then others start to come. So I think it's a function of really thinking very creatively. And if you do the right thing, the money will follow. I really believe that. And it takes a lot of courage to do that. But there are a lot of neighborhoods that are ripe with opportunity and ripe with possibility, but it's going to take investment, and it's going to take rolling up your sleeves and doing the hard work, and getting everybody involved and getting everybody rowing in the same direction, and getting neighborhood associations created, and getting business improvement districts created, and all of those things kind of raise the bar for everybody else. And for us, one of the important components that we've always done is food and beverage is a really, really important component of our personal model. People will go to a great restaurant no matter where it is. And so giving opportunities to food and beverage tenants in a neighborhood that might not be a great neighborhood, or in a mall, or or anywhere really, that people will go to a great restaurant no matter where it is. So think about that, as opposed to when you have the option of safe and ordinary with maybe a little bit less safe but huge potential. So we always go with the huge potential.
Thank you.
Danny, you're on mute.
Yeah,
Danny's talking, but he's on mute.
Sorry. Jessica said something very important, and she sort of glossed over it. But, when they went to Ocean Drive, or they went to Wynwood or something else, they were visionaries. So you talk about adaptive reuse. They were so far ahead of the curve. They saw something that nobody else saw. They took the risk, and they went out there and they were successful. They had the capital in order to be successful. But most importantly, because they were visionaries, they were able to get in at a really, really attractive basis, which allows you to do all the things that Jessica says. You can bring in these great restaurants, you can take some chances, everything else. The other part of adaptive reuse is, looking at malls and saying, oh, we're going to re-envision this mall as something else. And as Manuel shaking his head and John knows, it's really, really difficult. And it will also be a basis play, but it has to get really bad before it can get better, because you have to work through you have to empty out the mall. You have to aggregate all the different department stores that are owned by different owners who have different rights and different control mechanisms and everything else. And it's a very long, very complicated process. At the end of the day, I would tell you, adaptive reuse, you are either truly a visionary, or you're really patient and you can, in some way, shape, or form, pick something up on a really attractive basis. And that's the key to adaptive reuse is basis at the end of the day.
Yeah, Danny, totally agree. I think the basis is super important. I think the location of the asset is very important. You cannot build the family office anywhere. You need critical mass. And then the third leg to me is the partner. You need a specialized partner. If you're gonna do, for example, we are now in our mall in Montgomery, in DC, we are gonna do senior housing, and we're finding the best partners in the country to do that, because we are good at what we are good, you know. So it's not a solution fitting all. I think it's gonna be very limited. Densification of malls is gonna be limited to a narrow number of assets, probably the best ones.
Danny, you know, if you saw the neighborhoods when we first got there, you would be terrified. You would be like, I don't get it. Like, why would you possibly want to spend your money? Because banks would not give us any financing in most of these neighborhoods. This was all Aunt Phyllis, Uncle Larry, like loaning money. You know, and so it's really, you know, visionary. My dad used to say, I'm not a visionary, I'm just a really hard worker. But he was visionary in the way that he saw things, and he saw what things could be as opposed to what they were. And, you know, I say that, you know, he was very much of an artist because he would paint the picture in his mind. He'd stand on, you know, on Ocean Drive and you know, in the 1980s, and he'd say, you know what, this is what I see it looking like in 20 years. And then we spend the next 20 years kind of executing on that vision. So I think it's a function of future casting. And I think that everybody today has to take the opportunity, the quiet time, to really future cast and think about what will stick and what won't stick. You know, where do you want to spend your time? Where do you want to spend your resources? Who do you want to have on your team? You know, what kinds of partnerships, what kinds of businesses? And yes, 100%, Danny, that like landlords are partners at this point. You know, it's not the typical landlord, you know, you're here and we're here. Not at all. You have to support one another in order to survive in this environment.
Let me close and ask everybody the same question that we ask at the end of our webinars, and then Chuck will take it over to tell you about the next one, which is advice to students, because I can see many, many current students and many recent alums on the list of participants. So what do you think is the most important thing they should think about, either coming out of school now and being interested in commercial real estate, or having just recently come out of school? What advice would you give them from your successful perspective? And you too, Dana. We didn't get much insight from you because you were so good at asking questions.
You know what, I'll start off. Find a mentor. Find a mentor that will spend time with you, because creating that path, you can find what you like and what you don't like. Mentors are invaluable, and they help set you up for success down the road.
Sounds good. Who's next? Manuel?
Yeah, I would encourage people to come and work in retail. And this is not a joke. It's a fun place, you know, and you see probably it's a very complex sector, probably the most complex across the 4 or 5. And number 2 is, this is a personal thing. Don't lose the will to learn. I think the day you don't want to learn more is the end of your career. So you gotta have that clear in your mind. And the second advice is set where you want to get, because eventually you'll get there. You know, and relationships, as Dana said, are very important. You need to get surrounded by mentors and build up your network. So it's a fascinating time, and I wish you all good luck.
Jessica, what are your thoughts? Whoops, you just put yourself on mute.
Oh, I did the opposite. Okay. Work hard, try everything, expose yourself to as much as possible. And most importantly is be curious. Just be a lifelong learner. It doesn't matter what your age is, just keep learning and keep being curious and keep trying to improve yourself, and be passionate about whatever it is that you decide to do.
John, what is your thought? I know you were with grandchildren. What advice would you think about for the younger generation?
Oh, my children were with the grandparents. I still got kids who harass me. my advice, I'd love to tell them to go into supply chain or real estate because that's where all the money is, but it's so boring. To hit on what
It's true.
Manuel said, retail is awesome. It's such a dynamic asset class that the sum of the parts can be greater because it is all about curation and tenancy and putting together that just fun retail grouping, and that's really what will make a successful project versus some of the other ones that are a little bit more of the financing and location aspects. And then finally, I think Manuel also said this, throughout your career, it's about relationships and the relationships you build, whether it's a mentor, the people you work with. Your journey in your career will be long. Make sure that you spend a lot of time building relationships with other folks.
Danny, what are your thoughts?
Yeah, it's hard being last after everybody, but I think one of the interesting things, and again, retail is by far and away, in my humble opinion, the most complicated asset class. But we all love it. So we're not going anywhere because it would be a lot easier to go build multi-housing or doing something else, but we love it. So we're doing it. So you got to love what you do, first and foremost. And then secondly, and Dana said it, have great mentors. So I've been fortunate. I've had amazing mentors throughout my career. And so that's been the greatest part. And the one thing that has been consistent with all my mentors, they've always stressed the importance of just treating everybody really well. And it's just the most important thing. So no matter who it is, what they do, just treat everybody like they were your mother. And it shines on you over time.
Thank you. Those are great thoughts. So now let me turn it over to my colleague, Chuck Bowl. He will tell you about the next of these webinars. Each one is better than the one before. Thank you.
Terrific job. Thank you, Dana, and a terrific panel. Great advice for the many students who are listening in, and some good questions from you guys too, from my students out there, our students collectively. It's also a good reminder, the whole mentorship and the personal side of this is that we have great board members from the business school, from the MRED program, and the law school as well. And we want to thank them for their support for this U-Talk series. We're headed toward the 7th and final one. So I don't know if Natalie, could you put that up on screen? We'll give a little preview. Or Brandon, there we go. Okay, so the 7th and final U-Talk series panel of the year is on tech. And this is our core group here. Tigray Wenrich, CEO of Lab Ventures Miami. Lab Miami Ventures is on the MRED board. He's been helping to organize this. And we'll have David Goldberg, general partner with Alpaca VC, and Eric Fetter, who's with Lennar. Lennar has its own tech ventures under LenX, actually multiple ventures. So we'll learn more about each of these about a month from now in April, and we're really looking forward to kind of wrapping up the series on this tech note. So that's it for this time around. Again, thank you to a great retail panel, and we'll look forward to seeing everyone next time around. And it's all about the you. Thank you all.
Thank you very much.
Thank you.